Alright, so pretty much today we're gonna do a quick top-down analysis of the NAS 100 chart, Here we have four different charts right here, right? We have the monthly, we have the weekly, we have the daily. Let's fix up this. So we have the daily chart right here. 4 hour as well. Just put right over. Just freeze this up, freeze? Could never. Alright, there it is. So 4 hour and 15 minutes. I'm just trying to find the top. Here we have the 15-minute time frame. 4 hour. Now, what we're using right now is a simulator from Software FX. That's one of the more affordable simulators out there. And what it does is that it gives you this cool little interface where, wait there guys, go ahead and mute. Lots of feedback. Alright, good. So we're looking on the NAS 100 market. Now we're looking on multiple different charts. We have the monthly, weekly, daily, 4 hour and 15-minute. Now what we're using is, as I mentioned, a simulator which allows us to pretty much practice. So it's not the real market, but it's like past market data that is printed on the charts for you to pretty much gain experience. So today we have a few persons on this backtesting session with me. We have Chana. We also have Shanice as well. They will be here with me, reviewing the charts, giving me their feedback, and I, in return, will provide my feedback as well as to what I'm expecting to happen. And then we're gonna also have a few side discussions as well in terms of what persons that are new to trading, like what you should expect when you just started, like what realistic expectations. And if you're looking to get funded, we're gonna also talk about different organizations that provide huge capital for you to get started. Like we're talking about
50K.
50K, as little as 5K up to 50K. Some persons all manage up to $3 million worth of company funding, and it's not difficult to get there. The only challenging aspect of that journey, to get funded, would be to learn how to trade and manage yourself emotionally. So we're gonna start off with our monthly time frame. So we're just gonna jump into it right now. On the monthly, each of these candles right here, it takes about 30 days for them to move or to form. And I always hear persons saying that, hey, it's best to start on the monthly time frame, or it's best to start on a higher time frame when you're doing a technical analysis, because in doing so you are in line with deep pockets. That Drake song there, Deep Pockets. Yeah. So it's best to trade in line with deep pockets. Now we're gonna look for levels, like key levels at which we want to buy and sell. So you might have heard about support and resistance before, right guys? Yes. So support levels are like a specific price point on the chart which you expect, like an up move. So if price trades down to it, this peach box right here, we view that as support. So if price trades down to it, which is this line right here, we're expecting it to trade away and trade higher. So this is like a little diagram just to explain how support work. And resistance is the total opposite. So you just flip this upside down and you get your resistance level. Now, myself and Shanice, we practice a different type of trading methodology or approach. So we have a unique way of finding support and resistance here. China also has the same concept in his trading. So we're looking for similar things. So we're not guessing or here clueless as to what we're looking for. We know what we're looking for. It's just that we want to find them, highlight them, and then take action once price reaches these levels. So starting off with the monthly, we're going to start doing our charting on the monthly time frame first. Then we're going to move on to the weekly, daily, 4 hour, and we're going to execute our trades on the 15-minute time frame. So on this monthly time frame, we see where price traded up. It had a lot of back and forth here. It's like consolidation in a sense, but through all of this price movement, right, we see where price is making higher highs. So it's kind of consolidating, but it's ultimately going higher, which is good. So what we want to look for is support, because if you see a market making higher highs and lower lows, then obviously that market is trending higher. Now this is slightly a consolidating market as well, but ultimately looking for support levels is the best case scenario right here.
And what would be support?
Wait, come again?
What would
What
be
would be
support?
support?
What would be support? Well, if you should ask me, the most supportive level would be this down close candle right here. Let me just zoom in out a bit more. So this back candle right here, the high of that candle, if you just highlight that with a trend line, at this level would be my best suggestion for a level of support. And why is that? Well, because I have to obviously tell you why I'm looking at this as support. After this candle was formed, then we see where we had an engulfing bullish candle afterwards. Now institutions, they buy when price is going down, so they buy in down close candles. And if you go back and if you can check in the past, every time when there's a down close candle or a black candle, anytime that is formed, you can see like a expansion to the upside, which is seen in the form of this huge green candle. So I'm saying that price ultimately is going to provide some form of reaction at this level if it comes back to it. Now it can provide a reaction at the high, or let me just grab another one of these, or it can provide it at the open or at the midpoint. So we have these three levels to look on. Now what could make this no longer valid? Well, if price closed below the midpoint, so if we see a monthly candle just close below this level, then this support level is no more. So let me just highlight it as well. So if price closes below 44.74.110, then our support level is no more. And trading is pretty much a dynamic sport, so things can change real quick, real quick, right? So it's always to know it's always good to know what can go wrong, that we can take action. So let's go ahead and drop down to our weekly time frame because we already have our supportive level. Oh, and by the way, one more thing I want to outline. We see where this candle, this green candle right here, ran above these highs. Now, if you know anything about liquidity pool, and for the persons who are new to trading and don't know what liquidity pools are, it's basically a big pool of money. So after this high was created, we see where price dropped lower. Now this,
The retail traders would put their stop loss.
so when it dropped lower, this movement down, this is where persons or people who are selling would place their stop loss. So if a guy, probably he trades at FTMO or he trade at Pro Traders Fund, any of these traders, they might have sold here and placed their stop loss above this high. Now because of that,
Or another situation, breakout traders. People that trade breakouts. Okay.
give me a second there.
Video? Okay.
All right, I'm back, right? So price ran above these highs, and then they should have basically engineered liquidity in the market, which basically that's money. So the people in would have sell right here, are the traders that were selling right here. They would have set their stop loss above these highs. So when price ran above it, that would have tripped traders into coming into the market.
And
And
also,
also, I want to add, I want to add that
breakout
breakout
traders,
traders,
people that
people that
trade off of
trade off
breakouts,
of
would see
breakouts,
that
would
price is
see that
breaking out of
price
this
is breaking out of this
consolidation. People would want to buy.
consolidation. People would want to buy.
It's
You
running
know,
up,
it's
so
running up,
running up
so
above that high,
running
so
up
that
above
would
that
be a
high.
good place to
So that would
buy.
be a good place to buy, right?
No, not
No,
really.
not really.
So,
So
because we're trading
because we're trading
against that concept,
against that
basically,
concept, basically,
Mm-hmm.
we're wanting
we're
to
wanting to
view the market
view the
as
market as
trading
trading
towards
towards
liquidity
liquidity
and
and
running
running
the opposite
the
direction.
opposite direction.
Nice.
Nice.
So pretty much, if I understand clearly, what you're saying right here is that this box represents the consolidation right here, and because price ran above it, breakout traders would want to pretty much buy once they see price starts running outside of the range, and that is something I see a lot. Persons tend to chase the market. So if you go to your chart, so you see where there has been a huge upside in the market, a huge expansion, or a huge bullish swing, then a lot of traders will view that as a strength, so they would jump in and buy right away. And I mean, that makes some people profitable, but not everyone can consistently be profitable with that. Sorry, I say my voice is a little bit too low. All right, let me speak up. All right, so pretty much, let's go ahead and take a look on our weekly time frame. Now, this is a higher time frame as well, and on our weekly time frame, we see where each of these candles right here, each of these candles, it takes a week for them to form it takes a week for them to form. All right, let me do something. All right, so it takes a week for them to form. So we're gonna mark up our supportive levels on the weekly, and we see where price from this low, it started off from this low, ran higher, came back down, traded higher, then dropped down right here, ran higher again, came back down, and pretty much this would have be like a huge consolidation on the monthly, but it's still making higher highs, so this market is overall bullish. Now I see where we have a fair value gap. Right here. This would have be viewed as a level of support. So we have a level of support on the weekly as well as on the monthly. So if price comes back down to this level, we're expecting a buy. And if I should just go back to the monthly time frame, the weekly support level overlaps with the monthly, and I'm going to show you that in a little bit. But this is the support level we're expecting on the weekly. So if we're looking to buy, we're pretty much looking to buy around 45.29, or actually between 45.29 and 44.55. So let's drop down to the daily time frame. And on the daily, we're currently at a support level. What is that? Let me just put this over here. Try this over. So this down close candle, the black candle, we're gonna highlight the higher black candle because we view this as a support level. Now remember what we said on the monthly time frame, that the support level, we're looking at the high and the midpoint. Now if price trades below the midpoint of this down close candle, we can expect further downside, possibly to this little gap right here. This is the gap, and fill in some more of this.
And why would it go to that gap? Why is that important?
That's a good question. So the reason for that is because the markets, the algorithm, it moves on a few things. It moves on the basis of liquidity, and also if it has to trade efficiently. So when price runs and moves and leaves these gaps in the market, price has to come back and go through that once more, or trade to that area once more. So let's just take a closer look on that, right? Take this off. If you look here, we see where this is just only green candles, right? When price moves like this, it has to come back down and fill in this level, or these green candles, with black candles. That's the simplest way I can put it.
because
because
price
price
likes to
likes
move
to move
efficiently. So
efficiently. So
if there's a lot of
if there's a
buying
lot of
somewhere,
buying somewhere,
it basically
it
wants to
basically
balance
wants
it
to
out
balance it
with
out with
sells.
sells.
If there's any
If there's
gaps
any
in price,
gaps in price,
a lot of
a
times what
lot
you
of the
see
times
is
what you
that
see
it
is
comes
that
back
it
down to that
comes
level
back
to
down
fill
to
it
that
in.
level to fill it in.
Exactly. Exactly. So, if you look on this right here, you see where the blue box shows where price ran up very inefficiently, and then not right away, but a little bit after that, price came back down to fill in this inefficient move or higher. So think of like I don't want to use this example, but it's a perfect example. Think of like a paintbrush, right? Like you're painting a house, and when you use like a brush and you're rubbing it against the wall, it leaves like little spots, like little gaps, and you have to like run the paintbrush over it once more to really fill in that little spot on the wall. That's initially what price does. It fills back in these inefficient moves. So when price runs higher like this, it has to deliver on the downside. That is why you can see where the markets moves in wave. They don't move in one straight line. It's always in waves, up, down, up, down. So yeah, this level right here is a gap in price, which ultimately means that the market should pretty much trade come back down to this level. So we're gonna go down to the 4 hour time frame, and we're gonna see more short-term moves. So we have this gap right here between this candle's high and this candle's low. Let me highlight that right here. This is a gap. So price, if it respects the daily bullish support level right here, it would ultimately leave this gap open. If not, run down to it, fill it in, and probably further downside to fill in this gap right here,
And it's
and this level of inefficiency. So now we outline our levels. We're pretty much going to use the 15-minute time frame for sells, well, for entries I should say. So we're gonna go ahead and turn on our simulator. Now this simulator is pretty easy to use when you get the hang of it. We can't go back in time, as you can see. That has been disabled. So if the mistake or the damage has been done, there's no turning back. Another thing, we're gonna adjust our risk. So I have $1,000 in my account right here. $1,000. Now I like to view trading from a probability standpoint. So if I have $1,000 in my account, I'm going to say to myself, hey, I have 10 possible opportunities to pretty much make a return on my investment. So I would divide this $1,000 by 10, which is $100, and then that would be my highest risk. Now that doesn't mean that I'm gonna be trading with $100 all the time, no, but that is my highest risk. Now, given that this is my first trade, or I'm gonna take my first trade in a little bit, I don't want to have my highest risk at the beginning, because trading is also about psychology, and 75% of the world hates losing money. So, and I know I hate losing money, so I tend
So,
so this is why
right.
we
So this
would
is why we would
those traders that
those
don't like
traders
to
that
trade
don't
with a
like to
stop
trade with a
loss.
stop loss. Well,
If it doesn't go
if it
down there,
doesn't
then
go
it's
down
gonna
there,
go
then it's
here.
gonna go here.
And then
But
you
and
start
then
to
you
lose more
start to
money,
lose more
and
money, and
you can't control
you can't
yourself
control
because
yourself
you don't have
because
any
you don't
set
have
stop
any
loss to
set
take you
stop
out.
loss to take you
So
out.
it's really
So
good to
it's
have a
really good
stop
to have a
loss to
stop
say, all
loss
right,
to say, all
you're
right,
only risking
you're
this
only
amount.
risking
If
this
it
amount.
doesn't,
If it doesn't,
we don't get
If you don't get that, then you'll just have to lose that trade. But that's how you manage your risk, and essentially that's going to maximize your earnings.
Yeah, I like that. That's true. Like these markets would take everything from you, and a stop loss is the best case scenario. You don't want to be in here trading without a stop loss, because that is just a recipe for disaster. You're gonna lose everything, trust me. And I don't know about you, but the fastest thing that lightning is price. You ever see non-farm payroll it when that news release comes out and prices zoops in one direction, like you're like, wow, what happened? So you really want to practice using a stop loss, definitely, to safeguard your investment. So that is a huge recommendation right here. Now, we have all our key levels highlighted. We have our levels on the monthly time frame highlighted. We know that we're risking roughly at max is $100 per trade, and I'm gonna start off with my first trade at $50. Now, there's something that I have to pretty much share in terms of how I am internalizing the markets right here. What am I looking for? Or it basically help you, the viewer, to pretty much gain some usefulness from this video. So I'm looking on price to respect the monthly support level. Once that has been met, then I'm gonna drop down to the weekly, and I'm gonna look for weekly support levels to be respected. Once that has been met, I'm gonna drop down on my daily, and I'm gonna do the same. I'm trading in sync with all these time frames. It has to be, I have to see support levels being respected on all of them in order for me to risk any money, because right now I'm only using top down analysis. There's nothing else. I'm not using interest rates. I'm not using commitment of traders. I'm just left to the mercy of technicals right now, so I have to be very strict.
All right, no indicators, none of that, just pure price action.
No indicators, just pure price action. So let's go ahead and dive into that, right? So we're gonna start off with the monthly, and we're going to just speed this up a little bit in terms of how price prints. All right, let me slow down now, because we see where price rejects above this high, and then it starts to pull closer to this support level. So I want to slow down the simulator, because remember, if we miss the move, we can't go back, we just miss it, and that can be a little bit annoying at times. Now, I remember a couple of years back when I just started using this simulator. Well, it was not a couple of years, about a year now. uh, I wanted to gain more experience, because I know that when it comes down to any skill set out there, like the more you do it, the better you get at it. And after going through one of ICT's video, one of his video series, where I think the title was, "If I was, what would I say to my 20-year-old self?" So he based the video on him talking to himself when he was 20 years old. And one of the advice he gave was, get a simulator, practice what you learn on the simulator, and then from there you can start a live account, or you decide what you do from there. Because by back testing on a simulator, you build overall confidence in what you're doing. You see, it's one thing for someone to tell you that, hey, this works, but it's way more intense when you realize it for yourself. You start to trust it, you start to use it pretty much. And what safer way to test out what you learn in trading than on a simulator? So we see where price is dropping lower down to that support level. And remember, it can definitely run through that level. It can not retreat, it can turn around right now and go higher. But when it comes down to trading, you have to have a rule-based approach. It cannot just be that you're guessing, you're hoping. We don't hope. We look at levels, we study them, and we anticipate. Now, one of the things I always admire is these funded companies out there. You have a lot of funded companies that are so generous to provide anyone that has a skill with funding, with capital to trade. And I think that's revolutionary because trading your own money is quite hard. It's not impossible, but it's not an easy job to do. I mean, sure, you can definitely make enough money to pay like a bill or take a little vacation. But if you're looking at trading as a means to really, really, just use that to escape the 9 to 5 life or escape the matrix overall, you're gonna need more capital. You're gonna need a lot more capital, and it has never been as easy as it is right now to get capital when it comes down to trading. Because you have companies out there like FTMO, those guys are like willing to give you an account for like 200,000. That is insane. Of course, you have to pay like a sign up fee. They're not just giving it to anybody. But this the sign up fee is minuscule to the amount of money that you'll be managing. All right. I'm gonna speed this up a little bit more to a weekly. Almost reached there. Yeah,
Looks like it touched
almost reaching there.
Looks like it touched the other bullish order block
on the
on
left.
the left.
This one.
Yeah.
Yeah.
No, not that
No,
one.
not that one.
This one.
Yeah, that
Yeah, that
that wick
that wick
bounced right
bounced
off of
right
the
off
wick
of
of
the
that
wick of that
bullish
bullish
order block.
order block.
So you see
So you
that
see
price
that price
reacts
reacts
right off
right
of
off
the
of the
first
first
PD
PD
area
area
that it comes
that
in
it comes in
contact with
contact with
in a bullish
in a
market.
bullish market.
Shani- Shanice, PD array. Yo, let me tell you, you see, if me and you sit down in like a restaurant or any public space, I will start talking about these things. People would understand what the hell we're talking about. They're like PD Ray. What do you mean by PD Ray? They'd be so interested.
Okay, yeah. What do you mean by PDRA? PDRAs are like example the order blocks that we just took and the fair value gap.
That is correct. All right, so that level, this level. All right, so now price came down, top this down close candles high. I provide sensitivity from there. Now it didn't quite come back down to the level that we were hoping for. This level, like, I'm just looking for one more run lower and then turn and go higher. Let's see if we can have that. I'll probably just turn and leave it. Looks like it's gonna turn and leave us. Wait, so this level is unfulfilled, and I don't wanna, cause alright, so from this low to this high is price in a premium or a discount level right now?
What's premium and discount?
Oh, good question. So when you go to your charts like this one, you're gonna see different swings, and they usually look something like this. Like you see like a up move, then you see like a down move. Now, if you look on this little diagram that I drew right here, and you look on the chart, you're gonna see a swing from this low to this high. So we have this low to this high. Let's change it to a different color so you get the understanding. Then you see it drop down right here. This is a price swing. And then you have this one here from this low to this high. This is a price swing. Now, price swings can be divided in two portions: premium and discount. Now, the premium is the level of that price swing that you sell at. It's more favorable for sell positions. The discount section of that price swing is more favorable for buying. So once price is in a discount level, you want to buy, and if it's in premium, you want to sell.
So think about like when you want to buy something, you want to buy it at a discount price, right? So just think about it like that. It's better to buy at discount and the opposite for premium.
Sell at
Like to
premium.
just
Yeah,
how
yeah.
do we define discount and premium on that tool that you drew right there?
Oh, this tool right here, this one.
Yeah.
Oh, so this is what they call the Fibonacci tool. If you heard about the golden ratio, pretty much the golden ratio is like a sets of number, a sequence of number where the two previous number, the sum of the two previous number makes up the current one. So if you have 0, 1, then the third number gonna be. Let me see if I get that correct. Cause man, let me just keep it simple, with you guys. Right? I'm not a physicist. the golden, the Fibonacci right here. It's basically from the golden ratio, where once you pull the tool from the low of a swing to the high of a swing, below the 50% level, which is indicated right here by 50.0, Below that level is what we classify as being
Discount.
discount. Above it is what we classify to be premium. Now you can find discount and premium for every one of these swings right here, and all you have to do is to just grab a Fibonacci tool, find a swing. It could be this one, from this low to this high. So I pull it from this low to this high, and once price drops below the 50% level, then you're currently in discount. So this would have been the area that you want to buy at.
What also makes it very good if you have other factors that you can confirm a buy for yourself, right? So if you put back the Fibonacci back on the swing that we're looking at right now,
Oh, sure, let me do that.
the
Here you have it.
Alright, so
all right. So
you notice,
you
let's look at
notice. Let's
the
look at
fair value gap.
the fair value gap,
The fair value gap
the
right
fair
there.
value gap right there.
So
This one.
So
we're looking at that.
we're looking at that.
So just
So
keep
just
it keep it as it is.
keep it as it is.
You notice
You
that
notice that
below the
below the
50%, it is
50%,
below the
it is below
50%
the
level,
50% level,
and
and
you see the
you
bullish
see the
order block
bullish order
right
block
here
right here
underneath it.
underneath it.
So
So it would
be a
actually
really
be a
nice place
really
to
nice
buy
place to
if it
buy
came back
if it
down to
came
that
back
level.
down to that level.
But
But it looks
price
like
is
price
rallying
is rallying up
off
off
of
of
the bullish order
the
block
bullish
that we
order
saw on
block
the
that we saw on
monthly.
the monthly.
Yeah, I mean, yeah, but that's still no discounts. Hey, if price did come back down to, let me go back on it. Sorry, if price did came back down to the fair value gap you mentioned right here, it would have been a good place to pretty much buy it. It didn't came back down to it, and then it turned around and went higher. Now, if you were someone that chased price, you probably start catch FOMO and you, oh my god, it's leaving me. Let me just jump in and get it right here. No, you pretty much you want to forge discipline in terms of waiting on the rules to be met. Because in my younger stage, like when I see things like this happening, I was so upset. Like, man, it left me. So I'm gonna try to get in somewhere up here or here, and then ultimately it reverses and turns on me. So after time, after learning these painful lessons, you pretty much start to stick with your entries, or stick with your rules, wait on your rules. All right, so that one is pretty good. I wonder if we're gonna get that entry today.
Wait, quick question. Where you bring up the Fibonacci tool and it says sweet spot, just for those who don't fully understand, can you explain what that is?
Good question. So the sweet spot right there is pretty much the 75 level on the fib. So if I just open up the fib right here and I go to the fib levels, we see where the sweet spot is 0.70 level. No, wait a mute. Wait a mute. All right, nice. So the sweet spot is actually a level. It's a 0.705 level, and that level right there is the best level to get a buy at. So for this particular swing from this low to this high, this would have been the ideal level to really get a buy, or to enter the market for a buy, and that's why it's called a sweet spot. But it's actually a level, a defined level right here, which is 0.705, and that's a fib level. Now, you're not gonna always get the sweet spot. But if it appears, it's really great. I would always recommend going with the 0.62 level, because when you pull your fibs, price typically comes back to that level all the time. But for the best entries, the sweet spot is the ID level. I wonder if that provides some clarity right there as to what that is. All right, so let's take a look. Let's take a look on our. Take this off. Now this did move high. It respected this 45.89 level. We didn't initially have this level highlighted, and it also respected the midpoint of this fair value gap. Didn't highlight that either. We just only highlighted the bullish order block right here. Now we're gonna move with price because it's running higher, so we just want to highlight new levels that we're seeing. Now this don't close candle, this black candle, I'm gonna highlight that, the high of that candle. So this is our new monthly support level. We just want to see price get back to that level. It's persistent.
Price left the fair value, yeah?
Hmm? Man. This is a super bull run. Just look a bit more. Alright, so price is pretty much bullish on the monthly. So I'm gonna look for a level on the weekly, a more smaller level. We have these two up close candles right here. Gonna highlight these levels. Take this off. And just drag this over. Zoom in out a bit. So man, this market is alright. So we have a drop now. Alright, so we'll probably just get one good trade off of this, like Mike Bellafiore. Oh, no pun intended. So we're looking for it to come back down to this level. Alright, so this has been met. Now let me take a look on the monthly. The monthly, it could easily slip and come back to this fair value gap right here. Easily slip and come back down. But if it maintains support at these up close candles, it would turn around and go higher. So let's go on the daily. On daily, I've Could a deal look like this? Alright, so we're on the daily time frame and we have a fair value gap right here. Shannon, just see this fair value gap?
Yeah.
Yeah.
So we're gonna highlight this
So we're
one
gonna highlight this one.
and pretty much looking for price to respect this level. We don't want to see it trade below this low. If it does, then we were wrong, right? So we want to see it respect this peach box and then trade higher to this level. So trade higher to this level right here. That look a bit bright, but yeah. Alright, so we're gonna go on the 4-hour now because we already have our higher time frame levels on the on the weekly and the monthly. Well, on the weekly. No, this is dropping, so we don't want to just buy this because we don't want to be buying a knife or catching a falling knife, I should say.
And oftentimes when you see price running like that, it's going for liquidity.
Yeah, because you can see these big candles just running lower.
Go for those equal lows right there.
It could go for these equal lows, yeah?
Yeah.
Alright,
Alright,
Below
let's
this.
highlight them. Because sell liquidity is under this low. Now in trading you have a number of possibilities that can happen. It's sometimes always good to have like two outlook on a specific setup, because if one idea fails, then more likely it would fit the second idea that you would have. So if you expect price to be bullish but you see where there's a probability that, hey, it might be, if it's bearish, then it's gonna do this, and if it does this, then that would confirm it not being a bullish or buy setup, or rather a good sell setup. So like a number of good traders out there, they typically have like two outlook on the market. So yes, so these equal lows right here, this low, this has willing sellers below it, and the people that were buying while the price was going up, they would have their stop loss below this low. So these big black candles that are dropping lower, they could potentially be heading for the sell side liquidity below this. Now if it doesn't run for the sell side liquidity, it would respect this daily fair value gap and trade higher. But how we confirm this idea being true is when we see swing highs being broken and swing lows being respected. So let's go for it. Let me see what the 15-minute time frame. Alright, so it gap down. See that gap close to this sell side liquidity. So it might just run straight down to it. Might just run right down to this level. There we have it. So instead of respecting this level of support, price gap below it, ran up and then trade low, and it ran the sell side liquidity here. Now let's see what happens. because this trade is still in play. Alright, so let's stop for a moment. Now, this is Tuesday. Low of the week, Tuesday.
Alright, Tuesday normally makes the low of the week if you're bullish.
Alright, and sell liquidity get taken on the 4 hour time frame. Where could we find a logical target from here though, Shanice? After sell side liquidity has been taken, like if we're looking for up movement, where would we look? On this.
We would more than likely look for those equal highs up there and fair value gaps.
Alright, so we have the fair value gap right here. So price can reasonably reach up to that. And a very important thing I'm gonna learn over the years is that when we see where order blocks are stacked like this, we can't logically say that price is going to farm support at this one. We have to like definitely consider these ones as well because they're so closely stacked. Price can reach down into both. So even like this, like price could just reach down into this one, which it did right here. So it's not enough to say, hey, let me just focus on this one, but you have to look on the the candles that it
Alright, and it's also bigger bodied, so we like to focus on the bigger bodied candles
yeah, a lot of
to
body.
make them more.
Yeah, that's correct, a lot of body. So this has a way bigger body as well, just to add to it. So yeah, let's go back on this time frame. And what I was looking to do though, no, this I'm gonna take this trade actually. So we see where we have an expansion right here. So this made a fair value gap right here. Now let me make this a little bit more dynamic. I'm going to transpose this level on the 15-minute time frame. So this level right here is the same 4 hour sell side liquidity. We have a fair value gap in here.
We also have a change in market structure where it was going down and then reached that level, rejected, and went above that previous high. It's when it did that, it created a fair value gap. So basically, that's like a really good sign that it's going higher. And there's also a bullish order block that you can refer to right there as well.
Yeah, so this is the shift in structure right here, Shanish. That's the one you're talking about, right?
Right.
And then we have this bullish order block right here, and we have the fair value gap. So this overall there's a lot of confluence, and the catalyst for it to go higher as well is this sell side liquidity level right here, which is neatly tucked into this bullish order block on the daily, and also on the daily this is where sell side liquidity was taken as well. So if we go on the weekly, we have this bullish order block as well. So it's a lot of bullish PD arrays around this level. So that just build a confluence for this to go higher. Now how high? Up to this level right here would be a reasonable So what we're gonna do now is just I'm going to do something real cool. Alright, just so we can watch both the 4 hour and the 15-minute time frame play out. I'm just gonna go ahead and just duplicate both of them. And then 15-minute.
Duplicate the target on 15 minutes.
You can put the target on the 15 minutes as well.
Alright, let me do that as well. Is it there? Oh, there it is. So this is the target right here. Expecting price to go up to this. I'm gonna change this, the color of this box. Alright, now let's take a look on the entry. Now if we enter from here, how much pips should be this is 1,351 pips. So our stop loss is gonna be 1,351 pips, and our target is 1,500 pips. So let's just pop it in right there. Now let's go ahead and buy. Ooh, why that look like that?
You take for PTP and
Yeah, that look too close. Let me just take that off. Let's measure this again. Oh, it's actually way more than that. So 13,000. So put that at 13,000. You probably want to know 13,000 pips. That's a lot of pips. Well, Nasdaq is quite volatile. So I mean, back in the days it was like the beast. 15,000. This looks like a one-on-one. Alright, I'll do it now. So let's buy. Risk is too low. Did something wrong right here. Alright, I'm gonna do this instead. What is 50 as a percentage of 1,000? Sorry, 0.5%. No, it can't be 5. I say what is $50 of $50 of 1,000? Yeah, as a percentage.
It's so like 0.5%.
0.5%.
Yeah. Wait, you say of 1,000?
Yeah, about 1,000.
So 5% then.
Yeah, 5%. Alright, so I'm gonna see this now. This guy's too low. Alright, let me just use this instead. Lot size. There it is. Alright, so I use lot size 0.01 lots. Market is. Alright, so I'm gonna play this. Let's see what happens. So we have the 15-minute time frame over here. And we have the 4-hour time frame over here. And we're looking for price to come up to this level based on the sell side liquidity that was taken. Now it can pretty much turn on us, but in terms of how far we let it go before we say hey we're wrong is below this low. If it drops back below this low, then it's not a good trade and we just need to just cut our losses short and just move to the sidelines. Need some more speed, man. Some more energy. Need to see some big candles. That's when you know you're on the right side. Now, when you see those candles forming, those huge candles, that just indicates strength. If the candles are printing too small and they're consolidating and they're wicking all over the place, yeah, you probably want to consider like taking some money off that, or just coming out of it overall. I mean, there's always another trade setup. No, we have about 40. I want to take something off when I reach $50. Probably want to $50, man. Can just wait till you make like 150 and you take something off. Well, I mean, if I take something off at $50, probably 50%, I probably take off $25 in profit. So I'm gonna just take off something right here. I'm gonna close part. I'm gonna close 50% of the trade. Just close or just stick on it. Oh, I can't close 50% of this because it's the smallest lot. Oh my man. But hey, if you had like, if you had the ability to close 50% on your trade after it move in your direction, I recommend doing it. You know, one of the hardest thing for any trader to master is exit strategy, because you're gonna find where a majority of your trades goes in profit, but if you hold on to that and you don't take profits, you're gonna ultimately lose. A profitable trade is gonna turn into a losing trade, and that is demoralizing. So given that we can't take anything off of the market, let's just reduce our risk. You know, as a trader, you have to manage risk. You have to pretty much reduce your risk at all times. So let me just edit my stop loss. So my stop loss was ultimately here, but now I'm gonna move it up to the midpoint of this bullish order block. So if price does come back to that level, I want to get out. Man, this I want to get out. I needed to be a little bit more aggressive to run for these highs. So this high right here, I want to see run for this high. I see you run above this and ultimately grab this target. You know, it's really mind-blowing how accurate and precise, you know, ICT concepts can be. You know, you're just waiting for something to happen that you have seen happen multiple times before. I think the hardest part when it comes down to trading, or the most difficult part, is managing like yourself as an individual. You know, not allowing yourself to get too greedy, not being too fearful when risking your money as well. Come on, just run that high. Now this can pretty much reverse on us right here and go low. And you know, if you're new to trading, and you're probably, if you were the one that was in this position, you probably say, oh man, I have $59, I had nothing before, let me just take this and go. I mean, that's not gonna get you far, because you're going to jump out of trades that are profitable, and just because of a little pullback you got scared and jump out. You have to be numb towards the emotional side of trading. You have to be comfortable with the risk. Set your stop loss and just leave it. Just leave it. As the trade moves in your favor, you want to reduce your risk, of course, but you don't want to be fearful of losing money or be too excited and take profits too early. So I want to see prices run above this blue line right here. I run into this yellowish goldish box. That's our target. I was waiting on that to happen. If it doesn't, it just turns on us, and yeah. It's moving too lazy to get to our target. It's not giving me that reaction. It should just run. It's supposed to just run that high right now. Or it hurts me that I can't take off any money. I take off money a long time and like take some partials off. Cause yo, you can profit on a losing trade, and the trade can still go the wrong, can go against you. You still make money off that trade, cause you just take partials. Like you do have to wait until a trade reaches your target for it to eat. As it's moving to your target, you take some money off. I can't do it in this case because um
There's just one position on the lowest lot size, so can't take any for this one. But we're gonna watch and see where it goes.
you're on TikTok answering a few questions. When if prices is respecting that fair value gap on the 4 hour time frame. So it looks like right here. Because it went up there once, twice. Should just easily just run come up to this level. But instead it came back down right here. So let's see what happens.
Right. That's what I was looking at.
So this bullish order block right here. Last line of defense. If it breaks through this, then ultimately it's gonna run our stop. Come on. Get some strength and come up here. Now, this market traded lower inefficiently. Tagged sell side liquidity at this line right here. So ultimately we're expecting it to come back up to fill in this gap right here. And that's the trade idea. Now it also looks like it might trade lower, but ultimately we're looking for it to go higher and trade in this inefficiency
Before it trades lower.
before it even trades low, because it can come up here, bam, fill in this inefficiency and then trade low. People say they learn on their own. Could never be me. Could never be me. I wouldn't want to learn Forex on my own. Yeah, let's speed this up a little bit. All right, so we need to just run that that line at that blue line right here. In respect to this order block, so you should just run that high, run up to this level. All right, so I'm gonna take it here, guys, because let's just be honest. I was willing to risk what, $50, and on this trade I made a 126. It has not reached my target as yet, and I don't need it to. I was gonna take money off the table. So yeah.
Alright, let's see where it goes now. So you see how
So you see how it came down to the bullish order block there, reacted off of the midpoint of it, the middle of that black candle right there that's outlined.
Right here.
It's a really sensitive um,
spot.
spot.
So price
So
came
price
down
came
there,
down there,
respected
respected
the
the
midpoint and
midpoint and
rallied
rallied higher,
up right
up
up to the
right up
target.
to the target.
Nice, nice, nice. Exactly. As Shanice mentioned, the midpoint of the order block is very sensitive. So that was a level that she was actually observing to provide the next move or the next leg higher to our target. So we got our target right here on the 4 hour time frame, and that's the trade idea right here. That is trading in essence. Like, if you can find like two of these each week, which is not difficult because this is just one market and you have like hundreds of markets out there. If you can find one of these or two of these on a weekly basis, then you can pretty much make $200 a week or an average $100 a week. And I mean, that's not going to get you a skydiving lesson at Maldives, but it's going to pretty much allow you to cover 1 month's bill or cover an expense. All right, let's get some extra money in your pocket.
Alright, and
All
just
right, and just
imagine
imagine doing
that on
that
the
on the
funded
funded
account
account
Ah,
with
more to
more
risk.
to risk.
That's more
That's
money.
more money,
More money in your
more
pocket.
money in your pocket.
that is true. That is true. Like, if you can do this in a funded account, then because of the large size of that account, your return is gonna be even greater. Because this right here that we're doing, this account that we have is $1,000, and we made $123 in our first trade. Now, if you look at this level right here, that's 12%, 12.32% increase. Now, when it comes down to funded challenge, they're only asking you to make 10% on the account. They're asking you to make 10% of the overall account. So if you get like let's just say a standard 100K account, they only want you to make $10,000. No, I might make that sound simple, but it takes effort. It takes time to be able to provide those type of returns, and that's why a simulator is the best place to start, because you get to practice your craft, and when you do that, it builds confidence and it builds experience, and you're able to pass these challenge with ease. And when you get that 100K account, then you're able to pay for more expensive things, like probably your kids tuition, probably you start off the mortgage on the house, um,
Invest in
Invest in
business.
business,
Yeah,
you know?
yeah, I can invest in your business as well. Create another stream of income, of course, and you can do so much things. You can just get a few withdrawals from a funded account, create multiple business with that funding, and never trade again. You wouldn't do that though, but I'm saying that's how lucrative trading is. Like you can get the skills, come here, get the withdrawals, create other businesses, and stack those multiple streams of income. That's something that you can definitely aspire to do, but that's not gonna happen in one night. Take it off your head. It's not gonna happen in a month. It's gonna take time, and it's unique for everybody. You probably come in here and you get this in like 3 months, versus someone else that comes here and they get it in like a year. Because everybody's unique and different, and trading is a one man sport, pretty much.
And we
notice
notice
here,
here, like as
the trade is
the trade
just,
is just,
running
running
past the
past the
target.
target,
You realize
you
that the
realize
fair
that the
value
fair
gap that
value
we
gap that we
outlined,
outlined,
it came
it
up there
came up
and
there and
respected
respected
to the pip
to the
right
pip
there
right there
before it
before
rejected
it
lower.
rejected lower.
Yeah, let me highlight what you're saying. Let me highlight what you're saying. So it came. Alright, so the low of this candle. I'm trying to bring this up so I can highlight. That's the low of this candle.
No open. Just highlight the wick.
Alright, so the low, it comes in at 66.77, and the high of this candle comes in at 66.74. So 74.70, that's like 2 pips shy of this low. So that's, I mean, that's really good. That is really good actually. Now, price coming right here, it can definitely trade lower and run below this low once more, or it can, if it have enough strength, it can
Reach. We
reach
can
up,
even reach
We can even reach
this equalizer here.
if it continues lower.
uh,
Oh,
So there's a number of outcomes. Like one outcome is that it can respect this level and go lower, or it can gain strength, trade above these levels, and attack this high. So let me just outline that. So you have these highs right here. Or better yet, you have like a little. No, that already traded to. So you have this level right here. It's equal highs right here. Alright, so pretty much price can definitely reach up to this level. But I think this is it, guys. I mean, in terms of trading, we don't want to exhaust the mental capital too much. So we're gonna do this like every other week or every week, where we just come in, we just find one good trade, and we'll just have a quick discussion over it as well, and talk about some pressing concerns when it comes on to like trading in the industry, trading in Jamaica overall. What you should be mindful of. We're not telling you what to do, of course not, but we're providing you with additional information so your decision process can be a little bit more easier in terms of pursuing this as a career path. But yeah, that is pretty much it. Hey, Shanice, you have anything to leave with the people before we?
well, it's alright. So
as you've
as
seen,
you've
there is a lot
seen, there is a
of
lot of,
technicals. Not once
technicals.
did we
Not
pull out
once
an
did we pull out an
indicator. We
indicator.
just look at
We just
price
look
and
at
what it's
price and what
doing,
it's doing
and
and,
what levels we can
what
expect
levels we
it to
can
run
expect
off
it
of.
to run off of,
Right? So you
right?
wanna. It's
So
really good if
it's really good if
you're able to
you're able to
backtest,
back
whether it's on
test,
a
whether it's
live
on a live
chart,
chart.
which is
This
very
is which is
exciting.
very
You
exciting.
can go on
You can go on
the Riv
the
or
Riv
Trading
or
View,
Trading View,
or if you have this
or if you have
simulator,
this
you can just
simulator, you
back
can just
test
back
and
test
test out
and
the
test out the
concepts
concepts Watch the PD arrays, analyze with all the tools that we use, premium and discount, and basically just see what price does over and over again and study that and study the conditions of that. And you should be good.
Yeah, nice, nice, nice. China, China is China is on. Oh, yeah, he's doing.
Yeah, can you hear me?
Yeah, hearing him. So we're pretty much wrapping up, and based on everything, you have anything you want to leave with the folks?
Not really. But not gonna lie, this was very informative, and I'm definitely looking forward to our next session like this.
Nice, 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 definitely. And guys, you can always tune into our weekly analysis in the Telegram group. Like every week, we forecast price as to what levels we're looking at, and you can actually study along with us by just observing these levels. And yeah, it'd be a lot of fun. But once again, thank you guys so much for your time. This was Cross FX with another back testing session. Take care. God bless.